I see a huge problem with the trading industry right now, where not enough people utilize backtesting in the way that they should. Most traders backtest for a couple weeks, a month, maybe 2 months, and then think that's good enough for the strategy to adapt and profit in the future. It's really not. The more data that a strategy can pull, the more likely it is to be profitable in the future. And that is what my Ranger EA version 2 utilizes with a 10-year profitable trading history. Hello, everybody. Welcome to a new video update. This is episode 4 in this Road to 400% video series. So I just got a new camera, also a new computer. I'm still in my bedroom because my wife is using the living room as her office space, and so I'm in here. So here we are. But I'm moving soon, and I should have an office space that's a little bit quieter. So I apologize for any of the background sound that you're hearing. Okay, so now we're looking at the Ranger EA version 2. So this is the tracked account that's been going since January of this year, with 29.48% profit with a 10% drawdown, and we've had 0.71% profit with 126 pips and 100% profitable trades so far this week with 5 of them. So we've had 5 profitable trades and 126 pips profit so far. And it's only Wednesday. So this is the account at Oanda, and you can see that the results are comparable with 5 trades, 125 pips profit so far this week. And this is the live account. Now, I know that looks a little different than it did before. It's because I accidentally placed a manual trade on this account. And, you know, I'm surprised that hasn't happened a lot more for me in the last few months. But since I just got a new laptop, I accidentally entered a trade on my tracked account for this video series. And it was a manual trade that was pretty large because it was supposed to be going on another a manual trading account of mine. So I made a mistake, and it increased the profit from 466 to 10% in one trade, and also hit the drawdown of 30% because of that manual trade. So, you know, we all make mistakes, and I have been making fewer of them as I continue to go about my trading career. But sometimes they still happen. It's probably because I'm running 11 MT4 platforms from on my VPSs and on my 2 computers here at home. And so I need to be a little bit more careful about not making mistakes like this that can be costly. So I'm going to roll with it because, as you guys know, I started this video series with $1,000, and I'm going to profit using the Ranger EA version 2. I'm going to be profiting 5 to maybe 10% per month, and I'll be adding an additional $200 to this account every single month. And so because of this 5% profitable manual trade I did, it actually put this account at about 1,200. And so I'm just going to be rolling with it. And so hopefully you guys can forgive me. And the Ranger will be taking over from here. And hopefully no more mistakes will be made. Okay. So yes, so far this week, 127 pips profit, 0.75%. Profit overall with 5 profitable trades. So we still have a few days left, and so we'll likely see some more trades coming. So I also opened up, for those of you that don't want to see the skewed stats, I actually opened up another live account with 1,200 at Traders Way, and opened that on January 2nd. So just in case you don't want to see the tracked stats here that had the mistake to trade, then you can also see this one here. And I'll be posting this on the website as well. And you can see the drawdown is a lot lower at 0.13% with so far this week, or so far since January 2nd, almost a % profit. Okay, so that's the stats for this week, and let's get to the trades now and what those look like. So I'm going to be doing some back testing and show you some back testing in this video, but I'm also going to be going over each individual trade over the last couple weeks because I didn't have a video update last week because of the holiday, and so I'm going to show you what trades have been taken since that time. So the first ones were on the pound Canadian dollar. You can see the sell trade here, the short position, straight profit, so not much drawdown. And then we had a few buy positions here, 1, 2, 3, 4, and 5. So there's 5 positions all closed out near the open of last week, so which was nice. So the market opened up right on this candle, and it went up a little bit, and we were able to close out for a profit. So that was nice. The drawdown may look pretty high there. It actually wasn't. It was only using the default settings of the Ranger EA. It was only about 1 to 2% max drawdown there. So we had two more trades, one right here, and those ended up closing out for profit. So it was a nice bounce there, and then a really nice take here. So just one position and close out for profit. And then we had a few more. So a lot of good single trades, which I like to see. So we had one here, closed out for profit, a buy position, closed out for profit. And these were all based on inside candles. So we had an inside candle set up there. We had one set up here, and really good positions taken. All right, so then we found the peak here. So we had a huge move just yesterday of about 185 pips, and the almost all bullish candles. There's one bearish candle right here, showing that price could slow down there, but it wasn't much, and then it continued up. But the idea here is when we get that inside candle, that typically, or a lot of times, shows us that price is slowing down, and it's the direction that it was going before that, and there could be a pullback or some profit taking, and that's actually what happened. 185 pip push, entry, profit. All right. So this is why I like the Ranger EA so much, and this is why I use it in a lot of my manual strategies and on my live accounts, and my demo accounts, and it's because it shows a good place of where price is slowing and where you could potentially come out with some profit on that pullback after a big push. Okay, so that's the pound Canadian dollar. Now we're going to move into the Aussie CAD and the New Zealand CAD. These two pairs take less trades with the strategy, and it's on purpose because these pairs are not quite as volatile, and it's important for us to be a little bit more conservative with them, considering that we take a lot of trades on the pound Canadian dollar. Okay, so the first two are the trades that we've only had for this week or since the last update. Yeah, those ones were old, so it was just these two trades right here. So we had 1 and 2, and they both closed out for profit right there on the nice pullback. That happened on the 7th, so just to complete, well, just yesterday actually. All right, so the New Zealand Canadian dollar, and these ones were at the end of last week. So these trades opened up on the 2nd of this month, and there was almost enough of a pullback. It was really close to take profit right there, but just didn't get it. It rode back up, and it came back down. And this candle was right at the end of the trading session of the week, and there was some slippage with my trades, but I was able to come out with break even, which is fine by me because by the opening of the next week, or the earlier this week, it continued to shoot up. I do think that there's a lot of potential for this to move down in a pretty big way. It's really, really overdone at this point. You know, that's just my prediction. I don't know if it's going to continue to ride up, but there hasn't been much of a pullback in this entire move since this whole thing started. So I'm thinking that there is a lot of potential for this to ride down a few hundred pips, maybe 200 or 300 from here, or maybe a little bit higher. It might shoot up and then come back down. But there's a lot of potential for this to fall. So if you're looking for trading opportunities, I would look at the New Zealand Canadian dollar and look for any short or selling opportunities there. Okay, so those were the trades. Not a lot on those two pairs, but we had some really clean trades with basically no drawdown for this week and also last week as well. All right, so this is the Eagle FX account, just so you guys can see it. There was an additional trade I think taken on, or I didn't get the buy position on that account. So the Traders Way account actually took this buy position here, which did not get taken on the Eagle FX account. So this will happen. So your results may differ slightly from broker to broker, and I'm having the same thing, but it doesn't mean that the trade is any less valid. Okay. So I want people to be aware of that. If the results are slightly different, if I'm in a trade that you're not, that's okay. If you're in one that I'm not, that's okay. But the problem here is if it happens too often, then you might be losing connection to your platform, or your internet might be going out, and that's a problem because we don't want to miss trades and profit because of not a reliable internet connection. Okay, so the last thing I wanted to cover in this video is backtesting, and some of you have been asking, I want to know more about backtesting, how the strategy works, what kind of drawdown we can expect, what profit. All right, so that's what I want to be talking about for the next couple minutes before I end this video. So this is the pound Canadian dollar, and this was just a quick control points test. Now the dollar amount results that you see in this test can't be trusted, and that's just when it comes to control points. So it's showing a $416,000 profit, which is not accurate because the every tick test, the more accurate test is showing around 160,000 over the 10-year period of time with a drawdown of 56%. Now, I'm going to be talking about that drawdown and what you can expect and when it happened and how often drawdown of 56% can be or may happen. And so, because I'm watching these things as well, drawdown is obviously a pretty important thing, and knowing your strategy well and how often it's going to hit that can give us ease of mind, or at least can help us prepare. So the worst drawdown period was in 2018, and I think it was in March of 2018. And what was going on during that time was the NAFTA deal with Trump and Canada was actually falling through, and he was considering like just getting rid of the whole trade deal, which put a lot of pressure on the Canadian dollar. It was also a time during the time of Brexit too, so there was a lot of volatility up and down on the pound Canadian dollar, but the strategy was still able to come out and profit. So this was the first hit with the deal, and then it shot up again, and then it ended up falling back down, and we were able to come out with profit. The NAFTA deal didn't get destroyed, but Trump was threatening it, and during that threatening period, that's when we're getting this trickle up, and a lot of the pound was destroying the Canadian dollar at that point. But things worked out. The deal came through, and there we have it. So the drawdown from the original first order was about 600 pips. And I've seen with this strategy over time that the worst drawdown periods, so here in March, and there was a couple of others, where the price will shoot up from the original first order about 400 to 600 pips, and then typically fall back down in a pretty big wave from that point. And that's happened over the last 10 years. And so the idea with the strategy is that I didn't want to put a news filter on it because I didn't want the strategy to try to filter out any news, pandemics, big wars, financial catastrophes in the U.S. and other places in the world. I wanted it to try to trade through these events so it can adapt better to them when they happen in the future, because people are always talking about I don't want to trade through the news. I try to build a strategy that has a news filter, but most of the biggest movements that happen are not scheduled moves anymore, or scheduled news anymore. They are the unscheduled news events that really drive the price, and because so many news events now are political and they happen on the fly, and so we can't prepare for those, and that's why I wanted to develop the strategy to trade during all sorts of news events, unexpected and scheduled. Okay, so you can see here that there are some times that drawdown happens, but 90% of the time, drawdown will be under 20%, and with this strategy, and that's something that you can plan on, and hopefully you can prepare for. So preparing for that 10% time that drawdown could exceed 20% is something that all of us should do when using a strategy. So we know the ins and outs of what tools that we're using, so we can mentally prepare, because when it comes to trading, the mental side is, to be honest, one of the hardest things to control. Okay, so I think that's pretty much all I wanted to cover in this video for today. I hope that everybody is enjoying this video series, even with the small mistake that I made on that account. But I do have another live account that's going that should be on the website that you guys can check out as well. All right, thanks so much for watching. See you next time.